Good evening, folks. This is Andy Forex Academy, and we're on the start of the week session for the Forex Trading Room on February 9th of 2020. Our agenda, a look at the prior week, our currency strength meter for the past week and month, our calendar of announcements for the week to come, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Let's change to the long-term account. We did close out one trade with a very small profit, so technically we're up a little bit, but not much, and we're all cash right now on this account. So we're looking for a decent long-term trade. The pound pairs have been very bouncy, so I'm not sure I'm going to necessarily play the pound, though it is the obvious choice. But again, I'll be looking for two or three good long-term trades to put in the very soon. Our intermediate term ledger fared a lot better. We had actually, this was a very busy week on trades opened. We opened, I don't know how many, 2, 4, 6, 8, 10, 12 trades. 4 of them closed out during the week. A net profit on the closed trades, and quite a few closed out that were older than last week. But overall, we did gain in realized gains. I think something around 4 to 5% were up, and that's not counting the open profit we're carrying right now, which is pretty close to another 500 pips. So this week had a lot of very good movement, and we definitely took advantage of that. So we'll continue shepherding these trades as much as we can. Most of them already have profit protected to some degree. So we're looking pretty good on the open trades. And of course, we'll be looking for more trades to take as the situation warrants. And last but not least, the short term had a stellar week. I think it's the best week we've had on the short term account since the beginning of the fiscal year. And it's certainly the best week we've had in quite a while, regardless of anything else. We did implement some changes towards the end of last year to bring this account back in line. And I'm proud to say that between what the market gave us last week plus what we were already doing before that, we're pretty much there. We're still a little bit underwater on this account, but I think somewhere around 3, 4, 5%. But last week definitely bumped us back into the game. We made gains of in excess of 15%. Not a whole lot of open trades. This was just in 5 trades, and 2 of those were actually losers. One of them was flat, so 2 of the trades did give us the bulk of our win for the week. And I see that there's an error here on this chart. There's actually 6 trades. It's only showing 5. I can tell you that the one not being shown is pound dollar with 100 pips, 200 weight adjusted in our favor. So there were actually 3 winning trades, 1 break even, and 2 of them losers. But it was a really great performance. This is not so much, and we'll talk about this later, but it's not so much that I did anything special this week. It's that the market was moving in a very directional fashion, and we took full advantage of it. So you can't make 15% every week, or even a guaranteed 1% every week. That seems simply not the way it works. But when these weeks come along, you do have to take full advantage of them. Notes and opportunities for improvement. As I said, fantastic gains this week. I'm going to credit that to the market moving in a very tradable way more than anything I specifically did. As I said, it was an amazingly directional market. The pound and the euro are still the currencies to watch. It looks like they're weakening pretty steadily. There could be a turnaround, and you know what? We don't care. We'll trade them up. We'll trade them down. The important thing is that they are moving very nicely. Multiple pairs continue to be at long-term support resistance. That's also a very good opportunity to trade in either direction, either a bounce or a piercing of those levels. And as I keep reminding people, we have set dates for our live event, and I keep saying I'm going to fix that next year. I should say this year. April 29th, 30th, and May 1st of this year in Wilkes-Barre, Pennsylvania. Details are on the website. Relative strength meter for the last 30 days and the last 7, we see volatility on the monthly getting lower by about a couple of percentage points. The Aussie and the Kiwi continue to being the loss leaders for the month. Gold is probably what moved the most positively, so gold is up. Silver actually had a down month against everybody except the Aussie and the Kiwi. The dollar did pretty well. The yen did well. And then we have the others, the pound, the euro, the Swiss, and the CAD. We're pretty middle of the pack. I should say the CAD is probably a loser for the month. It only beat out the Aussie and the Kiwi, which were already losers. Looking at the weekly, volatility is also coming down. So we had huge gains this week on lower volatility. Why is that? Because the market was very directional. From the beginning of the week, the euro and the pound started moving in one direction and pretty much did not change. So even though volatility was lower, since these currencies moved pretty much in only one direction, we managed to take very good advantage of it. Looking at the weekly on the strength meter, the Aussie, the CAD, the Kiwi, and the dollar were the clear winners. The Swiss, the euro, the pound were losers. The yen was pretty middle of the pack. The yen was coming off a very weak prior week, and it moved back into strength somewhat this week that just ended. So that was pretty good. But other than that, like I said, the currency seemed to have picked the direction at the beginning of the week and just continued moving through Friday in that same direction with very notable exceptions. Our calendar of announcements for the week, we really have one on Tuesday, the Reserve Bank of New Zealand's interest rate decision coming out at 8 p.m., which is our regular evening session. So we will be opening up the trading room about 15 minutes early on Tuesday, just to make sure we have ourselves set up for the announcement at the top of the hour. So that will be made very clear in the calendar. There's a couple of other things here that might be tradable, but I'm choosing not to. We've got Reserve Bank governor speeches out of Australia and Canada at the same time for whatever reason on Wednesday night. Not going to be trading that. We'll take a look at what happened, if anything, when we do our regular 8 p.m. session that day. And the rest of the stuff is stuff I normally don't trade, and I'm not going to be changing that this week around. So we'll only be trading the interest rate decision, pretty likely from a fundamental perspective. Moving on to the charts, as I said with oil last week when it hit the very bottom of the chart, I didn't think it could go any lower, and it was a pretty flat week. So oil continues trending at the 50-50 and isn't budging up or down. We'll see what this week brings us. Moving on to the currencies, of course, as I pointed out in an earlier slide, the euro started going down exactly a week ago at the open of the market on Sunday and just never stopped. You can see that it was just an entire week of bearish candles. And on the short-term account, we caught the entire move. On the intermediate, we were already in the euro at a different price point, and we're still in the euro. We still have that trade open. So that if it keeps moving, it will continue giving us profit. If it turns back, we've already got a good chunk of that profit protected via a trailing stop loss. Pound dollar staying, it started going down at the beginning of the week. It did a little bit of retracement, which took us out of that short-term trade within the first 24 hours at 100 pips. Then it pretty much slept for a couple of days and then continued collapsing Thursday into Friday towards the close of market. We didn't re-enter the trade on the short term, but we do have that trade open on the intermediate term account, so we did pick up those pips there as well. USDJPY is going back up towards the top of the range. As I said, the prior week was just very topsy-turvy. This week it went all the way back to the top, and then on Friday started heading down yet again. This is probably, and we're going to look at the other charts, but the USDJPY is behaving a little bit contrarian right now. We've seen yen strength against pretty much everybody else, but not against the dollar. It's going back into yen weakness or greater dollar strength. It hasn't broken out of the top of its range though. So until it crosses that 110.30 line at the top, I'm not going to be trying to get in long. And if it does break out towards the bottom, I'm going to go in short, but it is in a very precarious situation. So this is one I'm not going to worry about too much. I'll obviously keep an eye on it as I do all the time, but I'm not eager to look for any trades on USD yen. USD CAD, pretty much the same thing. Obviously, it's collapsing against the dollar right now. Still has to break that 133.50 resistance level right about where it's at. Last week was pretty quiet, even though this is obviously a bullish breakout. We can see that the last four candles there are just in a straight line. So it did finish the week sideways more than anything else. I think this one is going to give us a really good opportunity to trade it back to the bottom, but God knows when, so we're not going to be in any rush. USD Swiss is heading up. I mean, that's perfectly obvious. It was a completely bullish week. We also caught this entire movement on the intermediate term account since we had a pending order that got triggered pretty early in the week. It is crossing the Kumo. I am still looking for a trip all the way back to parity simply because this pair likes to bounce between the 96.95 level and parity up there where 1 Swiss franc equals $1. It does that pretty consistently. It hasn't broken out of that range for long in ages. So I would think that the odds favor right now a trip back to parity, perhaps even a little bit higher. I think it got to the 1.03 at its highest in the last year. I'd have to go out to a weekly chart to verify that, but I think that was the high. Wouldn't surprise me if it keeps doing that until it does eventually break on one side or the other. For now, we're in that long trade. We'll be keeping that open so long as it keeps heading up, with our target being around parity. Aussie dollar, it is once again testing the very bottom. It actually ended Friday after piercing the last levels of support. This is one where we took profit on an earlier trade. We jumped back in and we're carrying profit once more. And now we'll have to see if it finally breaks out towards the next levels of support on the weekly or monthly. That's how far back we have to go to find lower levels. We have to go back to 2008. Kiwi dollar, same thing, but not as drastic, but it is heading towards the bottom. So the Kiwi seems to be straggling against the Aussie. Normally they're in lockstep. This time around, the Aussie collapsed and the Kiwi didn't. The Kiwi actually gained some strength at some point. Now it's losing it again. It's broken the trend line, tested the bottom, and then just bounced and continued heading down. This is another one where we are carrying significant profit on the intermediate. I think we took some of it at some point and then re-entered, and once again we're carrying a good chunk. We'll have to see if direction continues this week, so we're going to be very eagerly watching the market to see what it does provide. Aussie Canadian also heading towards the bottom, also open trade, and we're waiting to see if it does finally pierce that bottom. I'm very bearish on the Aussie all around, so I do think it's going to pierce those bottoms and keep going. But of course, we want to see it happen and not just go on gut feeling. Euro Swiss and other has already broken bottom. The bottom was at the 108. And that was broken quite a few weeks back. It kept going. So now we have a new bottom there at the 106.5, which is 150 pips below the prior bottom, which was established just in the past week or two. And I think that may break even further down. We took profit. We're in profit yet again. and most of it protected. So we're just going to continue riding that trend. And this is what we love, riding trends for as long as they last. Euro pound, pretty flat. It's still bouncing between a very narrow level of support resistance. We're waiting for the Brexit fallout to tip the scale. And the problem is that with Brexit, both the euro and the pound are weakening. So this one may remain flat for a considerable time before one of the two currencies comes out the winner. JPY a strong level of 125 for, I think, the second time in as many weeks. And eventually, I would expect to see this one go all the way to the bottom. But of course, again, seeing is believing. So we'll continue opening trades on the Euro JPY and catching as much short-term profit as we can before we eventually get taken into one of the bigger moves. That's what you have to do with the market. You're going to be trying 10 times and losing a little, winning a little, until eventually you catch one of those bigger trends and just ride it off into the sunset. Euro Canadian, we have a pending order which came within 3 pips, I think, of taking us in on Friday when the market closed. And the market's already open and it's up by about maybe 4 or 5 pips. So we're still within 10 pips of being taken in on a short, where we expect to ride this one to the bottom, perhaps beyond. Again, I'm bearish on the euro and I'm cautiously bullish on the CAD. So just waiting for that one to trigger. Pound JPY ended the week flat, still bouncing between support and resistance. It is at the bottom of its range, so I am looking for a breakout. We've got a pending order on the intermediate to take us back into this trade. And again, we're going to be in this trade in, out, maybe 10, maybe 20 times, looking for that breakout in either direction. When it happens, that's when we're going to get a truckload of profit. In the meantime, we'll continue trading it because you never know which one is going to be the one that actually goes all the way to the bottom. So got to take every trade the market gives you, and that will guarantee that you're in the trade that finally delivers. Same, Aussie JPY. So this one had always broken. Then we had that yen weakness and a little bit of Aussie strength for whatever reason. Towards the beginning, end of the week before, beginning of last week. And then on Thursday, Friday, it finally broke and went back towards the bottom. So again, we're waiting to see if this is going to be a continuation towards the bottom or just a little bit of a bounce before it heads back up. Traded cautiously, but hey, we make 50 to 100 pips on trades when we're cautious anyway. So what's not to like? Euro New Zealand, this is one I'm sort of stepping away from right now. It's very volatile. It's not doing what I would think it should be doing. The euro is getting weaker. I would think this one would be heading straight towards the bottom. It's not doing that. And when the market's not providing good entries, I never trade my gut feeling. So this is one where I will wait for the market to move in either direction before jumping back in. Pound Canadian, pending order in place to take us in short pretty soon if it breaks the next level of support. And again, we're looking for a free ride towards the bottom. We'll see if the market delivers that. I'm bearish on all the pound pairs. And last but not least, pound Swiss, bearish on this one as well, pending order as well. We're looking for a trip towards the bottom at some point, as we are with all the other pound pairs. And again, I'm pretty sure at some point we're going to have the opportunity. The question is when. That is the end of our charts. I see for this week and then possibly beyond. As I said, the pound pairs are starting to move into weakness, which may be the start of a long-term trend. Emphasis on may be. Until it actually happens, it's not real. The dollar pairs, the dollar is looking good based on recent events. What recent events? China is going into full meltdown as this coronavirus thing is impacting everything over there. At some point, it's going to start hurting the rest of the world as well, not the virus itself, but the fact that Chinese production is at a standstill. So everybody getting goods from China, they have whatever they have in their warehouses right now. More stuff is going to be coming. There's a bunch of American companies that have already shut down operations in China temporarily. Of course, I'm not saying they're pulling out of the country, but their factories are shut down because nobody's working. They're in quarantine. They're being forced by the Chinese government to stay home. So that is hurting the Chinese economy. This is a dog-eat-dog world. So the U.S. economy is looking good for now until we run out of Chinese crap to sell in Walmart. So it'll be a good couple of months before that really starts impacting things like Walmart. And the other thing that happened, of course, is that the impeachment proceedings against President Trump completely failed, left the Democrats with a lot of egg on their face. And that does bring stability to the market to some degree. So the dollar has benefited from that. We've had higher highs on the Dow Jones, the NASDAQ, and all the other stock exchange metrics. So the economy is just booming. The labor report on Friday exceeded expectations by about 60,000 jobs. So everything is looking splendid for the dollar. The problem is that there's not much more you can squeeze out of it. So I don't want to be a doomsayer or anything like that, but I just don't see a whole lot of room for the dollar to continue getting stronger. Let me put it that way. And that may take another year. Doesn't need to happen day after tomorrow. But at some point, the dollar is going to have to give up a chunk of its gains. And it's going to happen on the flimsiest of excuses. We're going to miss a target. The Dow Jones is going to go down. I don't know, whatever it is. It'll be something completely unpredictable. But it will affect the dollar, and we'll see it bounce in the opposite direction with a vengeance. The only thing we can do there is be on the lookout for it and trade it when it happens. That will not be the end of the world, and it probably won't do it in one go. It'll flip-flop a lot, but hey, we make money when things are going up, and we make money when things are going down. So just be on the lookout for stuff like that. Canadian pairs, the CAD, as I pointed out in the one chart, USD CAD, it is struggling against the dollar, but it seems to be doing well against other crosses, or at least holding on to its own. And at some point, I do think that the USD CAD is going to head back towards the bottom of its range, maybe even deeper. The yen looks to have shrugged off its recent weakness more towards the end of last week than anything else, but it is looking like it's coming back. And last but not least, the euro pairs. There's nothing good to say about the euro. The euro has lost its floor against pretty much every currency out there except for the Kiwi, which again, I don't understand why the Kiwi is doing poorly against the euro, but there you have it. So I'll continue shorting the euro very carefully, but consistently until that trend changes. And that's it. Some words of conclusion here, and I always try to focus on something that happened recently, and I try not to be mean, but the short-term mentality, and I try to keep people with short-term mentality away from Special Effects Academy. And mostly I've managed it. I've got some very good people on board with me. They've become friends, and they don't have that get rich quick mentality. But when you have that short-term mentality, it will become, if it's not already, your worst enemy when trading. I see this all the time. This is why I insist on personally interviewing anyone that wants to buy anything from Special Effects Academy, with the possible exception of my book. You can get that on Amazon. I don't interview you for that. But anyone wanting to buy the copy trader, getting into the trading room, getting the signals, buying the course, I always insist on an interview, and I chat with them for about half an hour. And 9 times out of 10, I tell them, hey, listen, this is not for you. Because I see that they want to get rich quick, or they have some weird idea that there's a guru out there who can give them 100% winning trades, or whatever nonsense they end up believing. And I understand that this is natural. Everybody would love to have immediate results. I would love to put $100 in the market and have $1 million tomorrow. Who wouldn't? But that's not how it works. I will have bad weeks. I will have bad months. Most of you have been here with me for all of them. Been here for either more than a year or close to it. You've seen me at my best. You've seen me at my worst. But long term, my results are always in one direction. They're up, they're positive, they're very positive. The accounts end up growing. Month to month, yeah, we can have a pullback, we can have a drawdown, whatever. And I try to explain this clearly to everyone, and I still get the odd person who leaves in a huff after a bad period. I made no secrets late last year that the short-term account was in the shitter. Things were going wrong. I said, I'm going to take some time off. In December, I'm going to sit down and I'm going to re-baseline that account and bring it back up. It's not the first time it's happened to me. It's probably not going to be the last. And then just a week before, somebody, I don't know if sarcastically or out of the kindness of their hearts, decided to pull out of the copy trader, wishing me luck and hoping my trading improved. Well, thank you. It looks like it did, but they're no longer with us because they opted to do that. So don't have that short-term mentality. I've never said I was perfect or that it was. Oh man, I hate it when I get disconnected in the middle of a rant. But there we have it. That was my rant for the week. I think most of it got captured, and well, that's going to be it for me. Apologies for that interruption, and now I have to edit the video and splice the two pieces together. But hey, I'm happy to do that. As usual, for the past few weeks, I am adding this question, sorry, to all of our presentations. Basically, what can we do to help more people? And you heard my rant right now. I don't want to help anybody. I don't suffer from hubris, or at least not too much of it. 90% of the people I will never be able to help. I hate to say it this way, but there is no helping them, at least not until they come around to a different mindset than what they have right now. And maybe that's what I should be doing, changing mindsets. But anyway, the 10% that I can help, how can I get my word, my services, my products out to them in a better fashion? Email me any suggestions, happy to entertain them. And that is the end of this presentation. Any comments or questions from anyone before we drop off? Okay, appreciate it. Thank you very much. Check your emails for the calendar for the week, and I will be talking to you soon. Have a good one.